Hello, this is Sarah Lyons. I am a real estate broker with Century 21 Judge Fite, and this is my Home Buying 101 class. I work for the largest Century 21 in Texas and Oklahoma. The brokerage has actually been around since the 1930s. That is Jim and Jan. They are son and daughter of the founder who helped take over and grow the brokerage from 8 agents to over 1,300. Personally, I have sold over 640 homes over the last 11 years, specializing in the West DFW Metroplex. That is supposed to say Fort Worth. And then over here is Dallas. All the red properties are homes that I have sold, listings, and all the blue are buyers that I have helped. So as you can see, I have been quite busy over the last 11 plus years, specifically in Tarrant County, as well as Parker, Johnson, Hood, and Wise, but mainly the Fort Worth specific area. Last 11 years, I've been also ranked as the #1 agent in our entire brokerage, 3 of the last 11 years out of 1,100 agents. My undergraduate degree is in accounting. I am on the board of managers for the Benbrook YMCA. I was also on the Ryan YMCA board before that. I'm also on the board of directors for the Parenting Center, which is a nonprofit that has been around for 50 years in Fort Worth. I also hold a few notable awards, including the National Association of Realtors, Realtor Magazine 30 Under 30 Award, which is given to only 30 agents under the age of 30 across the entire United States. I was in the class of 2017, no longer under 30 now. And my husband is a full-time stay-at-home dad. He has actually been homeschooling our sons for over a decade, who are now 13 and 15. So for me, this is not a hobby, a part-time job, or a side hustle. This is my family's sole income. 30 award, I'm the only West winner we have ever had in the Dallas-Fort Worth Metroplex. We have some Dallas people and up north, but I'm the only West person we've ever had. One of the big things that has made my business so successful, I host client appreciation parties throughout the year for my past clients. I host a holiday party or Thanksgiving pie giveaway, as well as a big summer party. The last couple of years have been at Cidercade. Before that was at the Coyote Drive-In. But my time and my resources are spent on my current and my past clients rather than cold calling, door knocking, and doing all of the traditional salesy things that are no fun. I have hundreds of reviews, 5-star reviews online between Realtor.com, Zillow, Google, you name it. But my business is repeat and referral, and that is a great way to live when people already know, like, and trust you. Availability is very important. I'm a full-time agent. I do not have any side hustles. So I am available for my clients as much as possible. And also I have a licensed assistant who also assists me. So if for some reason I'm not available to show a last minute home, she is able to jump in and help as well. Enough about me. Let's talk about the actual buying process. So understanding who works for whom is very important. So if you choose to work with me as your agent, my fiduciary responsibility is to you as my client. I will go over a buyer's representation agreement and explain what exactly that means as far as obligation. But just know that as of right now, as of mid-July 2025, I have yet to ever have a buyer have to pay my commission. I am able to negotiate that with the builder or with the seller directly as part of the contract. Also, it's very important to know your rights as far as being a buyer. You have multiple outs within the transaction, and I will make sure that every step of the way you know where those rights are and where those protections are. The biggest one is the inspection window, which we also call a termination option period. And that period of time is typically 7 days. And that is your opportunity to do whatever due diligence you need to make sure that that is the right property for you. That includes a home inspection, having your parents look at the house, having a contractor come and give you bids, whatever it is to make sure that you feel comfortable with moving forward. If you choose to not move forward during that time period, you will get 100% of your earnest money back, and you will only lose what's called the option fee, which is the amount that will go to the seller, typically $100 or $200. And also, too, you would not receive the cost for the home inspector's labor for their inspection. Another big thing to know is when we are coming up with fair market value for a home, we are in what's called a non-disclosure state. Texas is one of a few in the country that do not disclose to the state or to the county what you purchased your property for. The deed that makes you the legal owner says who you borrow money from, how much you borrowed, and what your interest rate is. It does not state the sales price on it. So when we look at fair market value and trying to identify what a good offer is, that is where I come into play. Being part of the real estate community and being part of the multiple listing service is that we have agreed to provide accurate sold information to the MLS. And that is something I'm able to provide to you in what's called a comparative market analysis. So if we look at a home and you are interested in that home, I will do a market analysis and I will send you the data of everything that is sold within that community, within comparable size, condition, location, over the last few months, typically within the last 6 months, and try to mimic what a home appraiser does in order to come up with where we feel fair market value is. There's nothing requiring somebody to list their home at what it's worth. They could list it for $1 or $1 billion. There's no regulation. So this is an important part of my job as your real estate advocate, going over where fair market value is and what kind of offer we should be writing up in order to make the terms meet your needs, but also the seller's needs so they'll want to move forward with us. It's very important with all of this that you get pre-approved prior to us really getting into the nitty-gritty of looking at homes. We want to make sure that you are qualified and we are looking in the right price range to make sure that we are not looking at a home that is well over what you're willing to pay monthly. What you qualify for is typically significantly more than what you actually want to pay monthly. So I don't really care what you're pre-approved up to. It's what the monthly payment will look like that you're comfortable with, and then we back that into a sales price and a budget. Having a fully pre-approved buyer is a much better thing than being pre-qualified as well. The difference is basically sending all of your information to the lender, including pay stubs, W-2s, bank statements, and having them run your credit and give you an actual pre-approval versus a pre-qualification, which may be a matter of just talking to them, giving them some information, but not actually sending them all the documents. We want to make sure that we have an advocate in our lender to ensure that we have a good opportunity of getting to the closing table. Sometimes people will get pre-approved with an online company that will give them a pre-approval letter, but when it comes down to it, and when it's your money on the line, they may deny the loan 3 weeks in, a week from closing, and it's your money that is lost, not theirs. We want to make sure to have a good local partner, and I'm happy to make recommendations regarding that. Another big important thing to know is that I work with new construction. Actually, about 85% of new construction in Dallas-Fort Worth has realtors attached. They pay us as agents out of a separate bucket of money than what they would typically negotiate a sale with a buyer. There's really no downside to having an agent advocate on new construction. This means that I'm able to help with going over the contract, negotiating better terms, being there at your construction meetings, being there at design meetings if you're making design selections, being there at the blue tape walkthrough, being there and recommending third-party inspectors, and being there at the closing. It is not just as easy as going to the model and looking. It's a long process, and having an advocate on new construction is very important as well. And sometimes I'm aware of special deals that you won't know about as a layperson because they do spend a lot of their marketing dollars and time coming to agent offices and sending us what their specials are. Also, there is another party in the contract. It's actually a third party, which is called the title company. They don't work for the buyer or the seller, but their job is to issue a title policy, an insurance policy for the property. Essentially, this will protect you as the buyer to make sure that if somebody showed up and said, I did work on that home in the past and was never paid, or this was my grandmother's home and I have ownership of this, any outstanding debts, liens, or liabilities from before the day of closing is covered by this insurance title policy. The title company is where the actual closing and signing happens as well on closing day. That's where we would go in person to sign the paperwork. The seller will sign the paperwork, and that is who holds your earnest money or option fee and is ultimately the one you're going to wire the money to for your down payment. Everything else can be done electronically as far as listing agreement or buyer agreement forms, contracts with a seller, repair negotiations, all of that can be done electronically up until the actual closing. That does need to be done with the title company in person, or we'll arrange a notary for that. The typical timeline from contract to close on a property is about 30 days. This is an example of a transaction for a pre-owned home. We would view homes. I would do a valuation or a recommendation on value and where we should make our offer. I write up the contract. You as the buyer electronically sign it and we submit it. And we have a few days where the seller may counter us. We may go back and forth a couple times, or they may flat out accept our offer straight off the bat. There is no automatic expiration on an offer in Texas. Some states do have this offer is null and void after a certain number of hours. However, Texas does not. The period when we have actually signed the contract, buyer, seller, everyone has officially signed, is called the execution date, and we have then a actually under contract property. From that point is typically about 30 days from that point to closing. The first period is that termination option inspection period I referenced. We also just call it an inspection period most of the time. And we write in how many days that is. 7 is very common, but in some cases it'll be shorter or a little bit longer. During that time, you are paying for your home inspection. You also have the opportunity to see the home again during that home inspection. The inspector is normally there for a good 3 hours, and it's normally recommended that you come for the final 30 minutes to go over the inspection with the inspector directly. They then send us a copy of that home inspection, and I'm able to review it. You're able to review it, and then we go over it together and make any repair requests during that time. We have up until 5 p.m. on the last day of that inspection window to actually negotiate fully what those repairs would be, and every party would need to sign the amendment agreeing on the repairs. If the seller agrees to a repair during that, they have up until closing to have it completed, but then they're legally obligated to have it done. Sometimes we'll offer or we'll negotiate a credit in lieu of repairs. That way it will reduce how much you pay out of pocket and allow you to do the repairs after closing. The next main step after the home inspection is the home appraisal. We do not attend to the home appraisal. That is done on behalf of you and the lender. The lender will take care of ordering that, but the appraisal is there to make sure that the bank isn't overlending for the property. This is another check and balance, another way to protect consumers, but also to protect the bank. And then there is a final walkthrough right before closing, typically the day before or the morning of closing, where you and I will meet at the property to make sure that the property is still in the condition that it's supposed to be in, that the seller has fully moved out, and repairs are completed. The closing, as I mentioned earlier, happens at the title company, and typically you will receive keys on the same day as the closing, unless we have what's called a seller temporary lease agreement, which we would know about well in advance. You will know about it back here because it's in the initial contract and it's in writing. We'll talk more about that if it happens. During all of this, you are working very closely with the lender. The lender is going to be having the processor who works for the loan officer compiling all your documents, which hopefully you already have provided when you got fully pre-approved. Then they put the full packet of all of your information as well as all of the home's information into the underwriting process. The underwriter will typically look at it around this time, and then they may send a few things back to get additional information from you or need some additional documentation. That is very normal to have some conditions, is what they call it. You'll clear the conditions during this period, and normally right around here, the week before closing or so, we are looking for what's called the clear to close. That means the lender has fully approved your loan, approved the property, and are working on getting all of your documents, the signing paperwork done to get over to the title company for signing. Typically though, this is 30 days from about contracting on the property to closing on the property. Now, that's me. When you officially go under contract, there are some things that you will need to pay for as part of the agreement. So I mentioned earlier earnest money and option money. So typically, earnest money is about 1% of the contract price. Option money is a couple $100s. Both of those are paid to the title company 3 days after closing. This money is deposited and held and will be credited back towards your down payment and closing costs. The earnest money I've only once ever had lost by a buyer, and it was because he lost his job the day before closing. There was nothing I could do and to get his money reimbursed. But there are multiple ways within the transaction to protect you as a buyer. The state ultimately wants to protect the buyer more than the seller because you have chosen to put money at risk, whereas the seller chose to put their home on the market. Those are I will send you reminders, information, detailed instructions on where that money goes and when and all of that. Then other things to consider that would be out-of-pocket expenses to anticipate are going to be some lenders will require a credit check. Sometimes they'll just credit it back or charge it on your closing documents. The home inspector, for sure, that is one that is not going to be credited back because it is for services. So you would be paying that directly to them, cash or check, credit card for their services for their home inspection. And you can choose to have a wood destroying insects report done as well, basically a termite inspection. For VA, it is required, but not for any of the other types of loans. And then there's the appraisal cost, which you will pay to the lender. They order that appraisal. With any property, though, I would recommend requesting what's called a cash to close, basically asking the lender to tell you what your out-of-pocket expense would be and what your mortgage payment would be on that property. That is very helpful because homes can vary on how much their insurance would be or their property taxes would be based on where the property is located, if you're looking in different school districts or if a house has a brand new roof versus not. Also, it can affect things if it was, say, a new construction where they're offering some incentives that they may not be on a pre-owned. This is just in written form of what I talked about before. Once we go under contract, title company will open escrow. They will start ensuring and that any outstanding liens or debts are paid off before the sale and ownership is transferred. During that first window in the transaction, you're having your home inspection. We are having the title company provide HOA documents. We're negotiating potential repairs. You're starting to get insurance quotes, all of those things. But I am giving you detailed instructions through all of this. I use a system that will send you emails every step of the way and even give recommendations of home inspectors and insurance companies and movers and utility providers and everything. I want to make it as easy as possible and not too overwhelming. Another big thing to note is that you get to skip your first month's mortgage payment. If you close in, say, March 6th, you don't pay April 1st, your first mortgage payment. May 1st would be your first mortgage payment. And it's not actually late until the 15th of the month, unlike with renting, where it's late on the 3rd. With mortgages, it's late on the 15th. Hopefully this is helpful information and gives you a little bit more empowerment about the overall process and what it looks like to purchase a home. I look forward to helping you and meeting you to see some homes very shortly.